Ever since the US government reached a bipartisan agreement to extend federal funding through January 2026, the stock and crypto market has been crashing. So today we're doing a deep dive onto what's fueling this fear, uncertainty, and doubt. And if you stick around to the end, I'll share how I feel on things. So first of all, many people are worried that the AI bubble has finally burst, with tech companies looking overvalued by traditional fundamentals like PE ratios, and recent Q3 13F filings showing that big names like Peter Thiel and Ray Dalio's Bridgewater Associates have been aggressively dumping their Nvidia stock. So it looks like smart money is heading for the exits, with retail left holding the bags, and it's sparking comparisons to the dot-com bubble. However, unlike the dot-com bubble era, earnings have been stellar across the board. Nvidia, Microsoft, Apple, and Google all crushed expectations in their latest reports. This makes me think we're not seeing a bubble burst, but rather a healthy pullback for the next leg up. I truly believe that this AI boom is the mother of all bubbles. We're locked into an arms race, not just at the corporate level, but also geopolitically against rivals who are racing to build AI super intelligence. Sure, by today's standards, these valuations look sky high, but what they're doing is they're pricing in the future value of how transformational super AGI is going to be. Take, for example, robotaxis. The first company to deploy a fully automated fleet could obliterate the transportation sector, which accounts for about 4% of all jobs in North America. In China, taxi drivers have already protested in mass over robotaxi rollouts, fearing widespread job displacement. Aside from the tech bubble narrative, the government shutdown prevented key data points from getting collected, leaving October's CPI and job reports in limbo, likely never to be released. These are crucial for the Federal Reserve's rate decisions in December. The market had already priced in a third rate cut, but now it's looking like a coin flip. Stocks, and in particular tech stocks, thrive on being able to borrow cheap money, so having a less likely chance of a rate cut in December is definitely a gut punch. Lastly, there are whispers of the Bank of Japan hiking rates in December that could trigger a massive unwind of the yen carry trade. Right now, investors are borrowing cheap yen, swapping it for dollars, and pouring it into high-yield assets worldwide. A hike would act like a margin call and essentially forcing fire sales and amplifying the global sell-off. So there is a ton of noise hitting the markets all at once during a banner year where Meta, Tesla, Google, AMD all surged near to 100% gains year to date. Profit taking was bound to happen. I personally think that the AI bubble has more to run, especially with rate cuts looming in 2026. But maybe I'm overestimating how far along we actually are. So what do you think? Let me know in the comments if you agree with this analysis, and good luck out there.